The way we exchange money for goods and services has changed dramatically over the centuries. What once started with simple bartering has now evolved into sophisticated digital transactions that can be completed in seconds from nearly anywhere in the world. This transformation is not just a result of advances in technology, it also reflects shifts in consumer behavior, business operations, and global economies. The beginnings: coins and paper currency. Historically, the first major shift in payment methods came with the introduction of coins and, later, paper currency. These innovations were revolutionary. Coins, made from precious metals like gold and silver, provided a standardized value for trade, while paper money was easier to carry and allowed for larger transactions. Both of these forms of currency were backed by governments, ensuring their legitimacy and creating a stable medium for exchange. 20th century, the rise of credit cards and checks. By the mid-20th century, checks and credit cards were introduced as payment methods that allowed consumers to make transactions without needing to carry physical cash. These tools offered significant advantages. For one, they allowed for increased security as they reduced the need for people to carry large amounts of cash, which could be lost or stolen. They also made payments more convenient. Rather than physically exchanging coins or bills, consumers could simply swipe a card or write a check, making it easier to purchase goods and services. Credit cards also introduced the concept of deferred payment, giving consumers the ability to buy something now and pay for it later.
Credit is becoming a pay-as-you-go thing, especially in very young millennial demographics.
This opened the door for more people to access credit, enabling more consumer spending and further fueling the growth of modern economies. The digital payment revolution. Fast forward to the 1990s and early 2000s, when the internet became a dominant force in the global economy. The rise of e-commerce platforms and online shopping necessitated the creation of secure, fast, and efficient online payment systems. This led to the development of online payment gateways, digital wallets, and peer-to-peer payment systems. Companies like PayPal were pioneers in this space, providing a platform that made it easy for consumers to make secure transactions online. Initially, PayPal was used primarily for online auctions, but it quickly expanded into a broader range of e-commerce applications. By allowing consumers to make payments from the comfort of their own homes, these innovations made online shopping more accessible and convenient than ever before. As the digital economy grew, so too did the demand for faster, more secure payment methods. This led to the development of mobile payment technologies, which would become the next major leap forward. Mobile payments and digital wallets. The advent of smartphones in the late 2000s ushered in a new era of payment methods, as consumers increasingly turned to their mobile devices for everyday tasks, including making payments. Mobile payment systems like Apple Pay, Google Pay, and Samsung Pay allowed users to store credit card information securely on their smartphones and make payments with just a tap at a point-of-sale terminal. Mobile payments offered consumers an unparalleled level of convenience. No longer did they need to carry physical wallets filled with cash and cards. Moreover, mobile payments often required additional authentication methods, such as biometrics, like fingerprint scans or PINs, adding an extra layer of protection against fraud. The rise of wearable technology, such as smartwatches, further pushed the convenience of mobile payments. Today, you can make a purchase simply by tapping your wrist against a payment terminal, making the process even faster and more seamless. Blockchain and cryptocurrencies. The future of payments? As we look toward the future, blockchain technology and cryptocurrencies represent the next big shift in payment systems. Cryptocurrencies like Bitcoin, Ethereum, and others are based on blockchain technology, which offers a decentralized, secure, and transparent method for recording transactions. One of the primary advantages of cryptocurrencies is that they operate outside the control of traditional banks and governments. Transactions are verified and recorded on a blockchain, which is a public ledger that anyone can access. This reduces the need for intermediaries and can lower transaction fees. Moreover, the decentralized nature of cryptocurrencies allows for faster cross-border transactions, eliminating the delays and fees associated with traditional banking systems. Cryptocurrencies also offer increased privacy and security. This makes them appealing to privacy-conscious users who want to keep their financial data private. Despite these challenges, cryptocurrencies continue to generate interest in the payment sector. Innovations such as stablecoins, cryptocurrencies pegged to stable assets like the US dollar, aim to address the volatility issue, making digital currencies more suitable for everyday transactions. As the technology matures and regulatory frameworks are developed, cryptocurrencies could become an integral part of the global payment ecosystem. The challenges of cross-border payments and remittances. Historically, transferring money from one country to another has involved a complex network of banks and intermediaries. Each of these adds layers of fees and processing times, which can result in slow and costly transfers. This inefficiency has a particularly profound impact on remittances. Many of the world's migrants come from developing countries and send money back home to support their families. But high transfer fees often reduce the amount of money that actually reaches the recipient. For example, sending just $200 in remittances could come with a $20 fee, which is a significant amount in many low-income countries. How technology is transforming cross-border payments. The rise of fintech has radically transformed this landscape. Digital platforms like TransferWise, now known as Wise, PayPal, and Revolut, have streamlined the process of sending money internationally. These companies use the internet to reduce the need for multiple intermediaries, often providing more favorable exchange rates and lower fees compared to traditional banks. This means that individuals and businesses alike can send and receive money faster and at a fraction of the cost. One of the biggest breakthroughs in this area is the integration of blockchain technology, which allows for secure and decentralized transactions. Unlike traditional payment methods, blockchain doesn't rely on banks or financial institutions to verify transactions. Instead, a network of computers, or nodes, verifies transactions on a public ledger. Cryptocurrencies and blockchain, revolutionizing remittances. Cryptocurrencies like Bitcoin and Ethereum are built on blockchain technology, and they've started to play a significant role in remittances. These digital currencies can facilitate instantaneous transfers, often with much lower fees than traditional methods. This is especially important for people in countries with limited access to banking infrastructure. In countries where the financial system is either underdeveloped or unstable, cryptocurrencies provide a reliable alternative. Transactions can happen directly between individuals, bypassing the traditional banking system entirely, which can be both time-consuming and costly. The role of mobile technology. Alongside blockchain, mobile technology has been another game-changer in the world of cross-border payments. In many developing countries, mobile phones are more common than bank accounts. Mobile money services like M-Pesa in Kenya have become an essential tool for financial inclusion, enabling users to send and receive money, pay bills, and even access credit, all through their smartphones. The convenience of mobile payments is not just about ease of use. It's about connecting people to the global economy. With mobile payment systems, individuals who have never stepped into a bank are now able to send money across borders, support their families, and engage in international trade. Remaining challenges in cross-border payments. However, even with these advancements, challenges remain. Regulatory issues are a significant barrier. Different countries have different rules for money transfers. Anti-money laundering, AML regulations, and Know Your Customer, KYC requirements. Fintech companies must navigate this complex maze of regulations, which can slow innovation and limit access in some regions. Another challenge is ensuring trust and security. Consumers need to feel confident that their money is safe and that their transactions will be completed without issues. Building this trust is key for fintech companies, and it requires robust cybersecurity measures to protect users' financial information. The future of cross-border payments and remittances. Looking ahead, cross-border payments and remittances are likely to become even faster, more affordable, and more reliable. As more consumers and businesses demand efficient ways to move money internationally, competition will drive down costs. Blockchain, cryptocurrencies, and mobile payments will continue to play a big role, enabling both developed and emerging markets to connect in new ways. The future of remittances could also include stablecoins, cryptocurrencies that are pegged to stable assets like the US dollar. Stablecoins could reduce the volatility typically associated with cryptocurrencies, making them a safer and more practical option for everyday transactions. The importance of security and regulation in digital payments. As we move into an increasingly digital world, security and regulation will be critical. With the rise of mobile payments, cryptocurrencies, and digital wallets, protecting consumer data and ensuring secure transactions are more important than ever. financial institutions and fintech companies must adopt stringent cybersecurity protocols to defend against fraud and hacking attempts. For digital payment systems to thrive, regulators will need to ensure that data privacy is maintained and that financial crimes like money laundering and fraud are kept in check. The balance between innovation and consumer protection will be crucial as we move forward. Future trends in digital payments. The digital payment landscape is evolving rapidly. Here are some trends to watch. Cashless society. In many parts of the world, cash transactions are declining as digital payments become the norm. Mobile payment systems like Apple Pay and Google Pay allow consumers to make purchases with just a tap of their smartphones, driving the shift toward a cashless economy. Contactless payments. Especially in the wake of the COVID-19 pandemic, contactless payments have become popular due to their speed and hygiene benefits. This trend is likely to grow, with more merchants accepting contactless payment methods. Biometric authentication. The future of payment security could lie in biometrics. Technologies like fingerprint scanning, facial recognition, and even iris scans offer a more secure alternative to traditional passwords or PINs. Artificial intelligence. AI is set to revolutionize the financial sector by helping detect fraud, assessing credit risk, and improving customer service. AI-driven chatbots and virtual assistants could help users manage their transactions more efficiently. Conclusion. The evolution of cross-border payments, remittances, and digital payment solutions is just beginning. The rise of fintech, mobile technology, cryptocurrencies, and blockchain is making financial transactions faster, cheaper, and more secure. These innovations are connecting people around the world, supporting families, boosting economic development, and simplifying global trade. However, as we embrace these new technologies, security and regulatory considerations remain paramount. The future of digital payments will depend on how effectively we navigate these challenges while continuing to innovate and create more efficient financial systems. As we move towards a more interconnected and digital world, the potential for financial inclusion and global economic growth is enormous, all thanks to the power of digital payments.